focusing on the World Bank projections for the year 2021 as a projected 5% growth for emerging markets and developing economies across the world, including Nigeria, in its 2020 January Global Economic Prospect Report. Now, the bank says output is also expected to remain well below its pre-pandemic projection. The report also forecasts a return to global growth, but states that risks would also remain as economic activity and incomes are likely to stay low for an extended period. The World Bank also says that debt levels have reached historic highs, making the global economy particularly vulnerable to financial market stress. In the context of weak fiscal positions and elevated debt, institutional reforms to spur organic growth are particularly important. Now, in the past, the growth dividends from reform efforts were recognized by investors in upgrades to their long-term growth expectations and increased investment flows. Well, joining me now via Skype to discuss this forecast and much more, I have with me economist Dr. Mabinuri. Good to have you on the Breakfast Show today.
Good to be here once again. Good morning.
All of the projections we have, assuming an initial COVID-19 vaccine rollout becomes widespread throughout the world this year, a recovery, however, is still likely going to be subdued unless policymakers move decisively to tame the pandemic and also implement investment-enhancing reforms. What do you make of this forecast by the World Bank?
Thank you for having me once again. For me, it is a forecast. It's like a prophet predicting the future and then not happening. There are always conditions attached to forecasts or to predictions or to prophecies. So when those conditions are not met, it might actually be very difficult to meet those forecasts. Fine, World Bank has projected that the emerging economy, including China, will grow by 5% in 2021. But before we can achieve that, we have to create a very enabling business environment. Without a viable business environment, the projection might actually be a problem. In the last few months or last 1 year, we have seen that most economies have actually gone into money-induced palliative, that is giving money to people for palliatives. But the aftermath effect of that is that it will be fueling inflation, because when there's too much money in the economy with no corresponding production of goods and services, too much money will be chasing feel goods. And that becomes that will produce what they call demand pull inflation. So, in an attempt not to fuel inflation while trying to mop up the effect of a pandemic, I would suggest that most economies of the world, especially developing economies like Nigeria, should intensify energy on creating a very conducive business environment for businesses to thrive. This is time for them to increase the ease of doing business so that people can come back to business, do more, even beyond what they are producing before the pandemic. Then we can achieve the 5% growth that have been projected for emerging economies plus China.
Okay, now, according to the World Bank Group president as well, while global prospect appears to have entered a subdued recovery, gradual recovery in the sense of that, but policymakers face formidable challenges in public health, debt management, budget policies, central banking, and structural reforms as they try to ensure that this still fragile global recovery gains traction and sets a foundation for robust growth. But what are the challenges do you think we have to contend with here in Nigeria, in our local economy that's peculiar than what's expected all around the world?
Unlike the Americas and then the Europe and even in South Africa here, where pandemic is seriously ravaging the economy and the health sector, we to a very large extent well, we can say it's the grace of God why the pandemic is not very seriously felt here. Fine, people are dying, people are still getting it on a daily basis. We are still recording daily cases in thousands, but it's not as much as what we are seeing in the US or in the UK, as the case may be. So it puts us on a very good note to kick off. The health sector, we all know that the government in the last decades has not really tried in terms of managing our health sector. So this is an opportunity for them to have really managed or improve our health sector, because they always say the best time to plant a tree was 10 years ago. The next best time is now. So I wish we had a very vibrant health sector. We'll be on very good, more than in fact, better notes to revamp the economy. But as it is now, we are still having a very health sector, very fragile, very. In fact, a friend of mine came back from outside the country recently, and he said at the airport, what they're interested about is, in majorly is collecting the fee for COVID-19 tests. Whether you do the test or you don't do the test, they're less concerned. Their one is just to collect the money. So at this juncture, we shouldn't expose ourselves unduly. Find the grace of God has always been there for us. Let me try to be spiritual this time around, that the virus is not spreading. But that notwithstanding, we shouldn't take our luck too far. This juncture, we expect government to, in our 2021 budget should have shown that. We want the government to, we expect the government to have spent more on our X sector, but what we have is still almost the usual. So we shouldn't overstretch the grades that we have gotten. And if you can manage the health sector very well, then the pandemic, then again, we've seen so far that there is this lackadaisical attitude, or let me say, a breakdown in upholding the COVID-19 protocol, because many people have lost interest, they have lost the zeal to protect themselves. So we can just, to a very large extent, exercise some level of social distancing, wearing our mask, and trying to curb the spread of the COVID-19. I think we stand a better chance to revamp in 2021 than any economy, or even in Africa or in the world, because the impact of the virus is not as much as we have it in other sectors in other countries of the world.
The severity of the impact of the COVID-19 definitely is one of the biggest wins that we have here in Nigeria, in the sense that the numbers are still relatively smaller compared to what we have globally. But now the near-term outlook remains highly uncertain, and different outcomes are still possible. Now, a downside scenario in which infections continue to rise and the rollout of a vaccine is delayed could limit global expansion to at 1.6%. This is from the earlier prediction of 5%. So if we don't have enough of vaccine rollout, that means we'll have a smaller growth rate. Now, for the 2021 Nigerian budget, do you think still, irrespective of the allocation we have to health, do you think we can still sustain any recovery within the manufacturing sector, private sector engagement? What areas do you think would largely see any sort of growth if we still don't have a vaccine rollout reaching Nigeria?
The manufacturing will, to a very large extent, continue expanding with or without the vaccines. And the unfortunate thing is that the 2021 budget did not capture procurement of vaccine. That's why the Senate President was saying the other time that they need a supplementary budget between now and the first quarter, that's between now and March, to accommodate that. And it's quite unfortunate that we don't have that being captured. So that means between now and March, we are strictly on our own. But we know that God has been with us, will surely see us through. Manufacturing sector, I don't see them being affected. The people majorly that will be affected as far as if the vaccine doesn't come in, are people in aviation industry. Aviation industry anytime from now might be impacted, because if this continues and the aviation sector is our border, let me say our airspace is locked, that will also impact them negatively again. Then people in service industry, is hotel, people running event centers, and especially people that make money from gathering of people, that is the comedians, the musicians, to an extent too, church programs and mosques and etc. That is people that make money until when people, if people don't come together, you don't make your money. It becomes they might really face some challenges in any moment from now, because as it is, we still need, by maintaining social distancing or respecting or executing the so-called guideline, the MPF PTF guidelines on COVID-19, you realize that people that make money in such a direction will surely be affected. But manufacturing, I don't see manufacturing being affected. I don't see education majorly being affected too, because we have seen that this virus doesn't spread much among young ones. Even some of them that get it, they recover. So to a very large extent, education will continue the way we've always had it. And again, ASU calling off the strike and etc. We have not seen the impact, because ASU has been on strike before pandemic, and now they called off the strike or they suspended the strike during pandemic. Now they've not resumed fully. So until they resume, we see the implication or the impact of that resumption on COVID-19. We can't for now say that education will be adversely affected. But for now, most sector of the economy in Nigeria, as Nigeria is concerned, will not feel much impact of the COVID-19, because we are expecting that by second quarter of 2021, the economy should come out of recession. First quarter, our GDP in first quarter of 2021 might still be negative or relatively close to zero, but by second quarter, we should be able to bounce back. And this is something. This is a precondition. This is on the condition that we don't have huge cases of COVID-19, or the spread is contained, and then people go back to work. Maybe they work virtually, or they work physically. So that is where we know, okay, the economy will surely bounce back, and then the projection can be achieved. And at this juncture, we're expecting government to come in terms of supporting manufacturing firms, or supporting investment, so to speak, into the economy. That's why we're even expecting foreign direct investment. As it is now, because of our COVID-19 cases, Nigeria should be one of the top destination of foreign direct investment. But we're not seeing that, maybe because of the way government is or government officials are overeating the policy. If they can slow down to an extent and allow the environment to become conducive for investment, then we should bounce back even beyond our expectation.
Wrapping up our conversation at this point in time now, Dr. The pandemic has greatly exacerbated debt risks for emerging economies and countries like Nigeria. You can largely see that also replicating the borrowing plan we have to fund the 2020 budget and other infrastructural development we hope to have for the year. Now, in the context of weak fiscal positions and elevated debt, institutional reforms are also necessary to spur organic growth. How do we now have institutional reforms that would help to improve on our growth trajectory, and also exploring alternative means of funding apart from the conventional borrowing from other countries?
As it is, most developing countries, including Nigeria, might run into what they call the debt crisis, what we call the debt overhang. A case where, however viable it is for you to raise new funds, it might be difficult for you to raise it because of your debt profile or your debt history. And Nigeria is tending towards that, and that's actually my major fear. Our deficit for this 2021 budget, for instance, about 5.2 trillion naira. So how do we get that? It means we have to go into borrowing. Recently, I saw a very shocking report that the federal government is about borrowing unclaimed dividend, which has grown to about 1.9 trillion naira. As people not claiming their dividend, the government wants to borrow a mix of those funds, or even money in dormant account. Account that have not been used for over a period. The government is going to borrowing such. I see that as a bad omen for. It shows that we are really serious in fiscal crisis, and a case where we cannot meet up with our daily spending as a nation. It means it spells doom for us. And at this juncture, we expect government to think inward and look at how to expand their revenue.
Most definitely.
Oil is very, very unreliable because of volatility and exposure to foreign factors beyond our control. So at this juncture, government should look inward and expand their revenue, then reduce borrowing. Borrowing is not that bad, but they should reduce it so that again, to reduce what they call the crowding out effect. But by the time they borrow from local source, about 60% of government borrowing comes from within, and that means they're competing with the fund that investors should use to expand. And that will be what we call the crowding out effect, which is not good for business environment, and which is also not good for business for investment to
Thank you very much for your submission this morning, Dr. Mabinori. It's been a pleasure speaking with you. And at the end of the day, with all of the borrowings we expect to play out this year, it's quite important to have transparency.